Welcome back to another episode of the Orange Wheel podcast, the podcast where we go into the corporate Bitcoin space. Yet again today, it's me and Ted. I know in the future we're gonna have some more guests coming onto our podcast, so that's gonna be really exciting. We actually recently just filmed an episode with a guest. So welcome back on, Ted. Today we're gonna talk about a few things. I know you want to introduce us to our newsletter, right? And then we're gonna talk a
Yep.
bit about the market afterwards.
Okay. Great to be back in Copenhagen here. So I'm back in my apartment instead of my father's lovely library back in Canada. Unfortunately, my suitcases didn't show up, so I'll be picking those up from the airport later today. So excuse the unshaven beard and everything. It's a little
I think it looks
wild
good.
look today.
Looks good.
Thanks very much. Okay, good. So as you brought up, Johannes, thought we kind of dive a little bit into the Orange Wheel weekly newsletter and kind of give our audience a little bit of a view of what that looks like. So I'll just share my screen here. So presently, our newsletter is only available on LinkedIn. So there'll be a link in the description, I think, for people to go and visit the company page and visit the newsletter page. Encourage you to subscribe. And we've set up a pretty good structure here that focuses on some of the highlights from the week. We release it on Wednesdays in the afternoons, European time. And we kind of have some highlights, like one opening remark of some major developments in the space. We go into macro and economic markets, Bitcoin KPIs, a little bit on the ETFs and institutional adoption, then corporate adoption, some of the highlights from the week there, updates on any corporate government developments, major policy and regulation changes, and then some highlights in terms of corporate strategy and notable moves besides Bitcoin acquisitions. And then we'll do a kind of a spotlight on one specific Bitcoin corporate company. This week we're looking at case, and then some views on trends and closings. So that's kind of the structure. We might kind of play with it over time, maybe condense it, maybe expand certain areas, but that's the structure we have right now. So I think it's a really great place to come once a week to kind of get a bit of a helicopter view of what's happened in the week, because there is so much moving, so many things happening every single day, that this is one way to kind of get a condensed view without spending all your time watching YouTube videos and the news like I might be doing. And then I wanted to kind of discuss with you, Johannes, a little bit about this really great debate that Preston Pish hosted on his podcast between Pierre Richard of BTC Inc. And Jim Chanos of the short selling infamy, big hedge fund manager out of the US. He's famous for having some of the most successful short trades in history. So Jim Chanos has come on also on his social media recently and talked about how he's shorting MicroStrategy, a position he's been in since earlier this year, and how he wants to short other Bitcoin treasury companies. His thesis being that he believes over the long term that the value of these companies will revert to the value of their Bitcoin holdings, and therefore he sees over the longer term downward price projection. So I think first of all, the debate was really cordial. It was great to see people with different perspectives and opinions on this topic kind of come in a very welcoming and open manner to discuss the perspectives without getting personal. So I encourage those who haven't seen it to watch that debate. It's really really great. And I think where we are at Orange Wheel is probably somewhere a little bit in the middle, but I think I would not be in a position to short any of these Bitcoin treasury companies. I believe there is a lot more upside potential to justify the premiums than there is downside. And in particular, I think one topic that they sort of miss is that where is the valuation of the Bitcoin on the balance sheet today is valued at Bitcoin's price today. The cool thing with equities is that it's a forward price prediction. So it's the market's looking into the future. So they're already taking into account the growth that Bitcoin is expected to have in and of itself on a present value basis, right? So, and so I think that present value discounting is done in fiat terms because we're still measuring the value of these equities in terms of US dollars or euros or what have you. whereas we're valuing so the discount rate of the future price projection of 40% growth of Bitcoin over the coming years is then discounted back. So I think that element alone, it can help to explain the large premium. And then furthermore, you of course have the leverage that companies like MicroStrategy can do at very low cost of capital using convertible debentures and preferred stock. And then you have it's a bit more of the wild card, but what can companies then do to create additional value once they have amassed a large treasury of Bitcoin? I think that's the other major one. And then I think a really surprising perspective, but one that maybe is not completely off the mark, is what Tom Lee had said on the news a few days ago, where he said that part of MicroStrategy's premium is that in a future where the US government wants to accumulate more Bitcoin in a cost efficient manner, it might make sense for them to go and buy them from MicroStrategy versus buying them from the open market. So I think there's a lot of factors there that can contribute to justifying that premium. And I know Jim Chanos, his fund also has failed a lot of times in some of their short trades. I think most infamously the Tesla short position he was on for a number of years. So his track
Yes.
record's not infallible either. Yeah, go ahead, Johannes.
Yes, I haven't watched this episode myself, but I've heard about Jim Chanos before. So he's long Bitcoin, right? But he's short MicroStrategy, right?
That's correct.
That is kind of funny, right? I haven't delved that much into it. Do you know why he would be in that position? Like, is he lacking behind understanding how businesses is adopting Bitcoin, or is he like maybe he just thinks it's a good short position? I don't know. Like he's been doing a lot of great shorts, the last many years.
Yeah, no, I think the jury's still out as to which side of the aisle will end up being correct on this one. I think this is a whole new topic area, a whole new investment case. So it's not unsurprising that there's different positions on whether or not there should be a premium on these stocks.
Hmm.
I think he has explained his position, and I think I tried to articulate it, but his view is that the company should only be valued at the value of the Bitcoin on their balance sheet. And if they're trading at a premium, he expects that premium to close over time. He thinks it's more based on hype and speculation versus on actual fundamental value creation levers.
Okay.
And I think the flywheel that we talk about, I think that's the big thing, is that they say when they have a positive MNAV, they can then issue equity to buy more Bitcoin. And I guess the big question is that accretive are you not diluting the existing equity holders? I think this is a fundamental question of debate. And I think the reality will be that some companies will be able to do it and other companies will not do it in a way that is not dilutive to their equity holders. So I don't think it's a black and white situation. I think there's going to be shades of gray in terms of those that manage to create value and justify their premiums, and those that don't. But I think there's a lot of things that Chanos has been not taking into account. As I mentioned earlier, this view about the forward-looking nature of the equity markets.
You said he shorted Tesla, right? In a bad time.
Yeah, I think he shorted Tesla over a time period when I know the stock price was going up like multiples.
Was
so
that back in 19 something?
I can't remember exactly. I think it was 20. It was in that period, 19, 20, 21, in that time period. Yeah.
That's really interesting because usually when we have Bitcoiners, like people who actually get Bitcoin, um, you know, having such a position that Jim has is it's fun. It's a little different because like I've had multiple like Bitcoin maxis come out to me and say like a year ago, right? They've been like, maybe I should actually put some money into MicroStrategy because the whole idea of actually being able to, they'll be able to acquire more Bitcoin per share than you would be able to acquire Bitcoin yourself. I feel like even that idea has reached the maxis. So it's kind of interesting that you would normally say that the maxis is those guys would be most difficult to convince about this, right? But then we have someone who's like Jim, who's probably not a maxi, and being in that position, it's interesting. I'm excited to see what's going to happen.
Totally agree. And I think this is the fascinating thing, is that I think it's unavoidable. I think the macro thesis we've sort of had is that the only way the wealth transfers from the existing system into the Bitcoin system is through an integration, which is what we're seeing now, which is Bitcoin coming into traditional vehicles and instruments, ETFs being one of them. Corporations, includes corporate treasuries being another new form of these hybrid instruments. And that's how the value transfer ultimately ends up occurring. And then again, these investors are starting, more and more investors are realizing that the right KPI to think about for the future, if you are a maxi as well, right? More people as they become more living on a Bitcoin standard, is can that company develop increase growth in Bitcoin per share? In which case, as a maxi, I'm also incentivized to invest in it. Even though you are introducing counterparty risk, you're introducing this situation where maybe the government will seize the Bitcoin from the custodians. So you are, I guess, in some ways taking out the true self-sovereignty. But I think there's no way that Bitcoin wins without having these hybrid instruments occur.
Okay, I have a question for you, Ted. So recently, there's been talk about, Fed US regulations that would allow banks to custody Bitcoin. I guess it's interesting to talk about this because the idea is that for bigger corporations, you could essentially just go to your like Fidelity or JP Morgan or something, your account and say, okay, I want to get my income, I want to get my money inflow and just place it straight into Bitcoin. This is probably gonna change a lot of how easy accessible Bitcoin is gonna be for bigger companies. So I'm curious to think or to know what you think, how this can affect our clients in the US, and also just in general what that would do to the Bitcoin adoption in the corporate space. Because this is what I'm seeing is an instrument that lets bigger corporations way more easily, add Bitcoin to the balance sheets, but also just invest into iShares or something. So there's like a different few areas.
Yeah, I mean, it certainly is one of these major hurdles that's now being removed, or barriers to adoption. I think Saylor's brought up three a few years ago, where he said one was the accounting change to allow for kind of fair value accounting, market value accounting. Another one was the ETFs. And then the last one was the banks being allowed to custody Bitcoin. So this is the third and last kind of pillar to drop. And I think you're exactly right. It just makes it much more. I think there's a few elements here. One is just the facility, the easeability by which retail investors, institutional investors, and corporations can get exposure and access through their financial service provider that they deal with on a regular basis in a way that significantly reduces the complexity of bringing in many different counterparties. And then the other one is just, I think, the sentiment change. I think when companies are realizing, oh, this is a service that is provided through my typical bank interface, it's no longer seen as something that's like scary or sketchy or hyper speculative, right? So I think there's a little bit on the credibility and the trust element that goes along with the banks. And there's also something just on the kind of ease of access. And then I think the question is to the extent to which that's going to also be mirrored in here in Europe. And I think it's kind of a bit more fragmented depending on which country you're in and which bank. But certainly some of the banks are quite far progressed in this space as well. I think some of the Spanish banks in particular, like BBVA, are definitely moving in that direction.
Yeah, I just saw recently there was a post about. Let's see if I can find it. Yeah, the European Central Bank, the ECB, has published a third-party progress report on the digital euro project. So, they're beginning to roll that out. And it's kind of weird because it's two different worlds, right? This is a post from today. So they're beginning to roll out, or at least reports about the digital euro. While as in the same week, we see in the US that banks are opened up for Bitcoin. It's kind of like, so it's two different lanes, right? And it's kind of scary. No one really knows when the EU would actually, begin to adopt Bitcoin like the US is doing. Who knows? But it's definitely, it's a big contrast right now. We
Totally.
see.
I think longer term, I think they're going to have to open up to Bitcoin. I don't think they can reject it. I think they're only going to damage themselves and their population by restricting further access. I think on the CBDC note, I do think that there's some similarities between the US and Europe in the sense that I think within the US, there's like the growing acceptance that Bitcoin can indeed become a store of value, something like a digital gold, but still a fundamental rejection at the upper echelons of power that it will ever become a medium of exchange. I think that's the fundamental, and it's also dichotomy within the Bitcoin community as well. I think there are major Bitcoiners that also believe it'll only become a store of value and the US dollar will persist and euros will persist, whether it be in And I think where the divergence becomes now on the medium of exchange side is the US is relying on stablecoins, so sort of the private sector, to kind of solve that problem, but put US dollars on blockchain via stablecoins. Whereas the ECB is saying we want to put the euro on the blockchain through a permissioned, government-controlled, centralized network. But they're trying to get to a similar objective, which is get our own fiat currencies on blockchain rails to give it that kind of like instant settlement, global access, very frictionless thing. And then I think there's a bit of like an ethical privacy perspective that really differentiates between, who do you trust more? Governments, not to like overreach in their power that comes with that, or the private sector, the circles and the tethers of the world. Personally, me, even though I live in Europe, I'm a more private sector sort of guy. I'm much more fearful of governments overreaching than corporations. But I think there's a couple different debates here, right? Because you can see there's kind of like centralized or private government or private, and then there's also like, will Bitcoin become the medium of exchange, or will fiat persist? And I think my view is that they're going to coexist for a period of time, but at some point Bitcoin merchants will not want to fiat if it's going to devalue just very, very quickly. They'll rather accept the Bitcoin, and I think people would rather pay in Bitcoin as well, because you're just taking out the middleman, so to speak. You don't have to have transaction costs, exchange costs on both sides.
I guess this is a whole other story or talk, because most people's worry is that with the digital euro, you won't be able to convert into other currencies or to Bitcoin, right? So it kind of locks your funds into one model. At least that's the scare factor of Maxi's talking about the CBDC in EU, but we'll have to see what they do eventually.
Yeah, that is interesting. If that's the case, I think it only also, then it's fascinating to think about that, right? I have two perspectives. I think one is like, I think that the free market will come up with ways to create an exchange for these things. In any country you go where they have capital controls, there's always ends up being a black market, right? And I think it'll be hard. Then again, when it's on chain, maybe they can really draw a hard fence around it. But I think the harder they make that fence, the less people will want to have to use this shit then, right? Its functionality really decreases if it's super closed off. So then it'll move people to alternatives faster, I think.
Yeah, and you can't never really close it off, because essentially, as long as you can send CBDCs to another person in EU, you could implement a third-party Bitcoin transaction into that as an escrow or something, right? There's already services that does that. So we just sent money through, what's it called? Forgot the name of that bank. Anyways, you send money through a bank, and then it connects to a third-party service that then sends you Bitcoin from that person, like seamlessly. So there were always going to be ways to cheat that system. But it's just going to be like, how is the regulations then going to look? If we're in a period where the CBDC is closed off, Bitcoin's regulations is probably not going to look that good in the EU. It's not going to complement it.
Yeah, it'll in some ways put up barriers to adoption, but it'll also incentivize people to find ways around those barriers. So it would be an interesting kind of situation to be in. And ultimately, I think this is what I'm kind of coming back to my conclusion, that it'll only be a temporary point in time when they really try to do this, because the firmer they try to kind of close it off, the more they're disadvantaging their own economy and people. So it's kind of like how much do you want to make? Yeah, exactly. Yeah. How much do you want to make your own people suffer?
Yeah, exactly. Okay, so we actually reached 21 minutes. I know you have a slide that we want to go through. Do we do that really quick, or should we wait for another episode?
Let's go to the next episode. It's a whole different topic, so I think we'll have to do that in another one.
All right, great chatting with you, Ted. Let's end it here and see you next time.
See you then. Bye-bye.